Welcome to the channel, guys. My name is Jess. So Bitcoin has recently had a massive rejection from 69k, falling over 4% within a 24-hour period and back into the macro descending channel structure. We're going to dive into the video today to talk about the short time frame and the high time frame charts and how much trouble the recent crash spells, as well as what we need for a potential reversal. Before we get into all that though, make sure you smash that like button and subscribe to the channel to get regular Bitcoin analysis every Monday, Wednesday, and Saturday. If you're after more content, be sure to check out my free Telegram channel, and if you're looking for my VIP channel, you can get more details over here. VIP gives you exclusive access to my personal trading setups with exact entry points, targets, and stop losses. Alrighty guys, so diving into the charts, let's go ahead and talk about what's recently happened with Bitcoin. So as you guys know, if you watched my last video, we were rapidly approaching this level of resistance here, or this liquidity zone here on the daily time frame between $68,400 and $72,000. And then within that range of resistance, we had these little micro levels here, starting first at 69.5k and $70,000. And most recently, that is where we've seen our rapid crash. So approaching that $69,000 level of resistance, Bitcoin was unable to push into that range, and we saw a breakdown resulting in a 4% crash that took Bitcoin back within that range of consolidation, right? This prior 8-month-long descending channel formation. So obviously that is a point of concern, and we start to worry when we break into the range whether or not this crash has had macro implications. Clearly, a lot of people were caught quite off guard by the crash. We saw over $300 million in liquidations over the last 48 hours. A lot of them were skewed to the long side, with two big long liquidation spikes in the last 48 hours. So in today's video, we're going to dive in and talk about the implications of this crash. Let's first of all break it down on the short time frame and talk about on the short time frame what we have, patterns of reversal and what we need for a bullish reversal and where that will take us, as well as our warning signs for a potential continuation to the downside, and to what extent can we have that continuation before we start to see macro bearish implications. So then moving on to our macro analysis, we'll dive back into this daily time frame, talk about what's going on here, and then finish off with our weekly chart analysis. Before we get into the rest of the video, guys, let's hear a quick word from our sponsor, BTC. We can get 15% off all of your trading fees and up to $5,500 in sign-up rewards when you create your free account using the link down in my description box. BTC is an emerging cryptocurrency exchange committed to providing you with a secure, convenient, and highly functional trading and investment platform. Available across all countries as a non-KYC exchange, get global access to over 150 trading pairs with minimal fees on both spot and futures contracts. Join today to get $5,500 in sign-up rewards and get 15% off all of your trading fees by signing up using the link in my bio or by using the code 1GG3 when you create your account. Okay, so diving right into our short time frame analysis, let's start off by first of all talking about the case for a bullish reversal over here. So on the hourly time frame, we can see that after Bitcoin rejected from $69,500 and crashed, we went on to find horizontal support here at this level, starting from 66.5 being our strong low here on the Smart Money Concepts indicator, and ending here at $66,800. So as we've consolidated against this level of support and finding resistance here at 67.9, we can see that Bitcoin has started to consolidate into an ascending triangle formation, which is generally quite bullish, guys. We generally see this pattern play out as a I guess, representation of gaining strength against a sell wall, eventual absorption of that sell wall, and then a push through, where the measured move of that breakout is then the height of our triangle over here, which takes Bitcoin right back into this level of resistance. Right, so applying that applying that to 67.9, we go right in to retest this range of resistance here on the hourly chart, ending at $69,500. So what that breakout's going to look like is, first of all, a candle close on the hourly time frame above that upper level here at 67,920, and then a move to retest the next level of support here at $68,300. Remember, that was previously a level of support here on the daily time frame, right under that level of resistance here. So in closing above there, we can then expect a bullish continuation to retest this upper range of resistance starting at $68.9 to $69.5 thousand. And on the daily time frame, what that would look like is another retest of this level of resistance here. So if we're able to get a daily candle close above this level at 69.5, we can expect a further bullish continuation into this liquidity zone and a retest of that strong high. Conversely, in the more unlikely scenario that we do end up breaking down from this ascending triangle formation, however, we're going to see that bearish continuation when we close below our strong low here at $66.5 thousand. So one of the indicators that we have for that potential breakdown is over here in the RSI. So we've got our corresponding RSI uptrend right over here. And if we see a breakdown of that, that is one of the early warning signs. It's not confirmation just yet, but it's the early warning sign that we're losing our structure here. And then in breaking down from that structure, retesting the strong low and falling below, we can expect a further bearish continuation to the next level of support here at $66,000. Now that retest would be very, very important, guys, because on the daily time frame, 66K is the end of our daily support over here. Right, so that tells us that if we fall below that level on daily time frame, we're going to see a much larger correction, right, to retest lower levels of support. So on the short time frame, what that's going to look like, if we just zoom out a little bit, is first of all a retest of 65. We just have another short time frame level of support there. And then at $64,000, we fall back into a prior horizontal range of consolidation, right? This prior chop zone that we were in earlier on in October when we were experiencing what was going to potentially be a red month. If you guys remember that segment of price action, we fall into this range of consolidation once again. And again, on the daily time frame, if we take a look at that liquidity gap, that takes us right to 64,000. So falling below there is when we can expect Bitcoin to once again consolidate within this range, starting from $59,000 to $64,000. And that is where things start to look a little bit more bearish. So that 66K level of support there is exceptionally important here on the daily time frame. And it is important that we hold it then on the short time frame charts as well. Moving into our macro analysis, guys, while the short time frame is still a little bit up for debate, right, until we break above $67.9 thousand, we can't really expect a sort of bullish short time frame just yet, but the macro charts are still looking very much bullish. And the reason why is not only because we're still in an uptrend, right, because even if we went as low as $64,000, we'd still technically be in the uptrend, but that would be honestly quite devastating, right? No one wants to see that. We've broken out of the range for the first time in 8 months. The last thing that we're expecting right now is a move down to 64K to retest a 2-month-long uptrend that we established from the range low, right? We should be seeing increased volatility, moving away from the trend line and, rallying exponentially more aggressively as we, move into that segment of price action characterized by a bull run, right? So while I think that scenario is really unlikely, it is not because of this uptrend that supports our bullish scenario. It is because of what we can see from the recent daily candle closes following the crash. So if we take a look at the crash, what we essentially saw was really aggressive rallying that took us to retest a level of resistance that we had not seen in nearly 3 months, right? And then following that, the rejection that we had from that insane level of resistance only took us down to retest the prior high in our 2-month-long uptrend, right, at $66 to $66.7 thousand. And we saw the exact same thing over here. So we had a bullish rally. We rejected off $66.5 thousand, and in the crash, we went on to retest the prior high within that 2-month-long downtrend. So that tells us that following this support here, as long as we hold support on the daily time frame at 66K, we have a much higher probability of moving upwards and breaking back above 69.5 and into this strong high over here. Once again, we can see essentially what Bitcoin's doing here on the macro charts is breaking above these prior highs in that downtrend over here, right? So we rallied, closed above this, deviated, crashed back down to prior high, closed above prior high here at $68,000, deviated to 69.5, crashed back down to retest prior high. That is our pattern of uptrend. That is our high highs and trending higher lows as well. So while we continue to do that, and as we've exhibited from that recent daily candle close, we are doing that, we should be seeing a bullish continuation on the short time frame and into that strong high as well. And that should be facilitated by the structure that we have here on the short time frame charts and the breakout of 67.9. Of course, while I do think it is less likely if we do end up losing support at 66k and seeing a further correction to 64,000, right, that lower level of support on the short time frame and the top of that horizontal channel, we're still technically in our uptrend, right? So while we're not experiencing that sort of like high volatility, aggressive rallying that we're, should be seeing, I guess, in the bull run, we are still technically in that uptrend. We're still above high time frame bullish macro validation, such as the Ichimoku cloud on the weekly time frame, and the overall trajectory is still bullish, even if we do see that correction. Moving over onto our weekly chart analysis, we have another piece of evidence that kind of supports that we should be really bottoming out here at 66,000, and it is much less likely that we see a further bearish continuation as opposed to a bullish reversal over here. And what I'm specifically talking about is the prior 3 weekly candle closes. So what we saw, right, was a red candle followed by a doji candle, so potential reversal candlestick pattern, and then we confirmed that reversal by printing a bullish engulfing candle. And not only did that finish off this pattern as a bullish reversal pattern, but it also broke us out of our macro descending channel structure over here, right? It was an exceptionally bullish weekly candle close. And following bullish engulfing candles and this pattern that we're seeing over here, we generally have a much higher probability of seeing another green candle print as opposed to a red candle as we're seeing over here. So we're still 4 days away, or 4 or 5 days away from the next weekly candle close. And the overall analysis here in terms of the macro charts is still very, very bullish. RSI is still positive. We're still very much broken out of the downtrend over here that represents our range of consolidation. And there is nothing suggesting here that we should be seeing a higher time frame reversal, and that this crash that we recently had any macro implications. Alrighty guys, that is all the analysis that I have for you today. If you enjoyed the video or you learned something, don't forget to smash that like button and subscribe to the channel. If you're after even more content, be sure to check out my free Telegram for daily updates as well as crypto and economic news. And if you're interested in my VIP channel, you can get more details over here. VIP gives you exclusive access to my personal trading setups with exact entry points, targets, and stop losses. And if you are a trader, don't forget to sign up down below to BitUnex to get 15% off all of your trading fees. I'll catch you guys in the next one. Bye!